Good morning, everybody. It's Max. Hope everyone's doing well. Sorry I haven't been around much lately. I got so far behind on my trip, I just cannot get caught up. No matter how hard I try, it's just not working. All right, so let's see what's going on this morning. All right, well, I did profit boxes for today, so let's look. Let's start, and I want to start with Tesla. All right, they had a great day yesterday, and they blew out both of their strike prices, but their lower strike price, 185, they covered that at a loss. However, because the stock went up, they made money on the synthetic, they lost money on the call. But overall, it was a profitable trade. In fact, they maxed out the trade, because what do we know about the profit boxes? If they finish at the top line or above, it's a maximum profit. Well, in any event, Jay rolled out to a 205 for next week. And I thought it might be interesting to look at this trade and option strat. Okay, so I have this trade loaded up. So here was the 185. Right now, the trade for next week isn't on there yet. So let's just, okay, so here's what happened. When they put this trade on, the market was like around 185. The market has moved up. Okay, which is great. The trade's worked out. But in the meantime, you can see how much time decay. Like right now, the trade is worth 14.1 million. If they wait till, if they wait till Friday, it'll be worth 15.6 million. So they can make an additional 1.4 million, right? Okay, the thing is, if you step out a little bit, you look at it like this, they've already made about 95% of what they can make. And we're going to look at that in another way. And today, if the market for Tesla had gone the other way and it had dropped back to 185, or God forbid, even lower, the profit they had in that trade would have disappeared. In other words, this is a time that Jay is always going to roll an option, or anyone's going to roll an option. And that is whenever you've done a covered call strategy and you've realized virtually all the profit. You've realized 90% of the profit. You just have 10% of profit left, but you have all that risk. The risk reward skews not in your favor the more you make on a covered call. So what he's going to do is he's going to go ahead, unfortunately, and he sold this option for 2, and he probably had to buy back for around 10 yesterday. That was not pleasant. At the same time, don't forget, he has 3.2 million shares that have been face ripping lately. So he made more money on the shares than he lost on the short call. So it was still a max profit. But now let's pretend like I'm just gonna exclude this one. And now I'm going to put the 205 for next week. That's the one he chose, but I want to try to look at why he chose that. Okay, so if I include that, now let's look at the position that puts us in now. So now that puts us in a position where if the market keeps going up, we can keep making money, where before we were capped. Okay, so that's good. And in fact, we'll be capped in this one too, but the market has to go up another, 13, 14, 15% before we get capped in this one. Okay, so that's good. Of course, we still have some time decay we can earn in this one, because you can see right here. All right, so you can see right here, this position's worth the 40 million now, but at expiration, it would be worth 48 million now. So there's another 20% on the upside. So that's worth it to go for. Now let's look at another way to look at this. The delta is one way to look at the option price. 30 delta is kind of the sweet spot for selling calls that are out of the money. A 50 delta is an at the money call. So that would be what Global X sells. The 30 delta is that's kind of the JP Morgan model, or the FEPI model, or the curve model. They go out to about the 30 delta. So in any event, you can also see if you can look at the delta on the other option, the option we had to cover, it was at 90. So the deltas, the best an option can get is at 100. So you could just tell by the delta. It only had 10 on the upside, but 90 on the downside. So you can look at risk reward that way too. Delta is kind of a risk reward measure, or it can be. So when you have a 30 delta, when you sell the 30 delta option, you put the risk reward favor back in your favor again, because you have 30 you can make and only 70 you can lose, as opposed to on this option you only had 10 more you could make, but 90 you could lose. So that's very typical. They'll roll out, and then next week, as some time goes by, if they get into next week and we get into like Tuesday or Wednesday, especially if it's moved up a little bit, they'll do the same thing. I predict they'll roll into a 30 delta option into the next week. So we'll see. I'm going to start keeping a look at the deltas, and we might even start measuring. We might even look at the thetas, because they're probably trying to get a certain amount of deltas and thetas. And I'll start keeping track of it, and we can probably, deconstruct what they're doing. I bet you they're aiming for the 30 delta, but I bet you they also have some other metrics in there as well. We'll figure it out. All right, so let's look on the spreadsheet. All right, so I updated this chart on the crash position. I don't know if they've rolled that one yet. I'm not aware of it if they have, but if they have, I'll find out about it tonight, and we'll talk about it tomorrow. Crash is kind of an inverse Tesla. For everyone that doesn't know, it's a covered put strategy on Tesla stock as opposed to a covered call strategy. All right, so now let's look to the Defiance funds. All right, looks like the cash market just opened, and we're ripping again. Another day, another face ripper. Look at that first bar. Market's been open 9 minutes, and we're already outside the Bollinger Bands. Okay, and we're already also above max profit on the day. Sorry, like I said, I got behind. Sorry, we're missing a couple of profit boxes there. Doesn't look like a whole lot happened while I was gone. It looks like basically the market's moved straight sideways in the past week. From last Thursday, at 9 o'clock in the morning, to this Thursday, it's worth the same price basically. All right, so, but that's good news. We want these to rip. So here's the Defiance Fund, JEPY, same thing. It's ripping, but it's not out of its profit box yet, but it's close to max profit. Of course, the day is young. I mean, here in another half hour, this could be going the other way. Usually there's a trend around holiday weekends, and this isn't a holiday weekend, but next week is, and this may be I don't know, but there's a trend right around the 4th. So we'll have Wednesday off. And there's a trend that day should be a big up day. And sometimes the day that you come back from the holiday also, but the days leading into the holiday weekend, like leading into Memorial Day. Okay. So on the Russell, it's not as strong. It's right in the middle of its profit box, but that's all right. Not a bad place to start. Not a bad place to start at all. Okay. So let's see what else we have to talk about. Let's talk about this one. What do you guys think about QQQT? Okay, I'm obsessed with it, and you guys know that I like SPY tea quite a bit. Okay, so with the Defiance funds, they have two types of covered call funds. We're going to talk about the NASDAQ version of the covered call funds today. They have a full overwrite where their upside's totally capped, and they go for maximum yield, and that would be the QQQY. And we've had that one around for a while. It pays 50 or 60% yield per year. However, yield and total return aren't the same. And the last time I checked the total return for the year, I think it was up 12 or 15%, something like that. Let's just take a look at that. All right, so the QQQY. So this is the full override, and we'll just compare it to the NASDAQ. We don't expect it to beat its parent asset. These aren't designed to, but just to have something to compare it to. We'll look at it. So this has been open 3/4 of a year, 0.78. And look, just in that short amount of time, it only started out at $20. It costs that. I mean, it's only worth 15 now, but it's paid nearly $8 in dividends. Total return is, without factoring anything reinvesting, total return is, like I said, 12.74. And I also mentioned 15. Well, it's actually 16, but 16's the annualized gain. Okay, so I think that's pretty good. I don't know. Let me know what you guys think. Just by comparison, of course, the parent asset is up 28%. So this is getting 28 to, we'll call it 13, 12.7, call 13. It's getting a little less than half of the upside. Good news is, if the market was down, it would get a little less than half of the downside too. The buffer works both ways. And these funds that are a full overwrite, because they're a full overwrite, they have a ton of buffer, and they also kick off a ton of yield. The yield is the buffer. The yield creates the buffer. Okay. So let's look at let's talk about partial overwrite. So on a partial overwrite, they don't have one for the NASDAQ yet. That's the one I'm going to talk about today, or it just came out a few days ago, but they did the same thing on the SPY. They have JEPY, which is the orange line, which is the full overwrite, where they sell an option, and they commit to sell all of their shares. So they trade all of their future upside over a certain point for some yield. Okay. Well, these guys came out with a fund that's a partial override also, where they do a spread, and it's not that big of a deal, but it basically just partially caps the upside. So, and it's called SPY-T. Okay. Well, you can see pretty much this chart tells the whole story. They're basically the same asset. I mean, very similar. You can see every bump, and I mean, it's basically the same. The one that does the full overwrite earns a higher yield, so it pays out a bigger dividend. It pays out about 4% a month. So you can see the NAV drops 4% a month, once a month, whenever it goes ex-dividend. Well, the other one, SPY-T, because it's a partial override, it only pays out about half that much. So the NAV only drops about half as much. So SPY-T has half as much NAV depletion. So for people that don't like NAV depletion, SPY-T's what they would call a more stable fund. Now, the trade-off is it only pays 20% instead of 45 or 50%. But anyway, it's nice to have choices, right? So let's look at it this way, maybe. Here, I'm going to try to show it another way why I like it so much. Okay, right here, here's the current technology. Here's the current way we do it. This is the full cap. Okay, so you can see that when a strategy like this, once the market goes up a little bit, they can no longer make any more money. Okay, now let's look at let's do this. Okay, so we're going to build a covered call on NDX. Okay, so this is the profit loss graph of a very typical trade. The market, if the market goes nowhere, the trade makes money. If the market goes up, the trade can make a little bit more money to a certain point, and then it's capped. Then there's no more capital appreciation available on the upside. The good news is there's a buffer, though. This kind of trade doesn't lose money until the market drops more than 0.2%. And even though it's just 0.2%, that really makes a difference. It gives this trade a huge edge. You can see right here on the bell curve, 61% of the occurrences are on the profitable side and 39% are on the unprofitable side. Selling options makes you it gives you a little bit of juice, gives you a little bit of edge in a trade like this. Okay. So we all know that. The problem is you trade all the upside. So here's all they do. All they do is they buy a call above the call they sell. So it might be like this. Okay. So now we have a position where, once again, if the market goes nowhere, this makes money. You know, that's how theta positive trades work, or trades where you're earning time decay. So it's still the same thing. The market has to drop. Now it doesn't have as much buffer, but it's still, you still have a little buffer when you put on a trade like this. You know, it has to drop before it starts losing money. And in this occurrence, 59% of the occurrences are on this side of the you know, positive occurrences are on the good side of the bell curve. So, and we can also look at the chance of profit up here at 58%. Okay. All right. So great. But what this really does for us is when we occasionally have an outlier, a 2 standard deviation move up, this trade can still make money. So this is what SPY T's chart looks like. I was talking about, which does it on the SPY, but this is what QQQT's profit and loss chart will look like. So I like that. That's a lot better. That's going to make it where that's going to make these funds where they don't go up so slow. Traditionally, the funds that do the full cap, they go up so slow because they're capped out and they can only make a small amount every day. This helps solve that problem. Okay. The trade-off is these funds don't have as much downside protection. SPY T will do worse than JEPY when the market goes down. QQQT will do worse than QQQY when the market goes down. The higher yield that those other funds kick off is what creates the buffer. So just something to think about. But if we're in a bull market, you would, in my opinion, you would do better with, you would have better overall total return with QQQT or SPY T than you would with the full overrides. Okay, so I did some back tests, but that stuff's kind of boring. Let's just look at what else the market's doing. Then I'll let you guys get out of here. I know it's a work day. Okay, so Russell's ripping now. Russell's now at max profit, so that bodes well for IWMY. Okay, we're going to check the indexes real quick. NASDAQ still ripping. It's a max profit, so that bodes well for QQQY and QQQT. And then PX. This is what JEPY trades, and it is only about at a half profit now. We'll take it. The day is young. Okay, we've already looked at Tesla. Let's look at Mr. Okay, now these guys rolled an option into next week. They rolled the 1540s into next week, and I made the adjustment on the chart. These guys still have some upside. If this market starts going up, you know, this fund isn't capped, which is good. And neither is Coney. Here's a chart of Coinbase. And then what else should we look at? Let's look at NVIDIA. This is for NVIDIA. And I have one of their option trades loaded up in option strat too. Maybe we'll take a look at that really fast. Kind of the tale of two option trades. Okay, so all right, so yeah, and I have the Tesla trade loaded up. I mean, these guys are making money hand over fist. I mean, the Tesla trade's up 14 million, and that's approximate because it's approximate, but they're up a lot. Watch Retire on Dividends video if you want to know to the penny how much they made on that trade, but they killed it. NVIDIA is killing it too. So what they did, okay, initially they sold this 135. They sold it for $1.18. Then the market dropped hard. They sold it last Friday. The market dropped hard Monday and Tuesday. So then at some point they came in and they covered it. And I put the new trade in here, and I just, I put the new strike in here. At some point, they came in and covered it because they could buy it back for it was like 20 cents a few days ago when I started looking at this. So they sold it for $1.20, covered it for 20. So they figure you put that dollar in their pocket, and then they switched to this one. So watch, I'm going to exclude this one. And then we're going to include this one. Then they rolled down to the 128, and they got something like 76 cents for that one. And now that one's depreciated. That one's only trading at 66 cents. So these guys are killing it. Now this is covered calls can make money. It's a good news situation. It can be both directions. When it rips, it can be a good news situation like we just looked at on the Tesla situation. When it dumps like this, you can have a chance to make a really quick buck, and they covered that for a really quick dollar and then wrote some more calls. These calls, I believe, are even in the same week. They expire. Yeah, they expire. So they rolled early enough to write calls in the same week. So now it's kind of like double dipping. And I wrote the transaction down there. The premium they got represents about an 88% dividend. They'd be able to pay about 88% if they got that premium every time in theory. But that was a really sweet roll for them to be able to cover the 135s really quick. Let's do it like this. They covered them right here. And I don't know whatever happened to those 142s. Anyway, they did have some 142s, but in any event, I just wanted to show their main position was on this 135, and this was a sweet roll that they made money on, and they double dipped. They could have just not done this, and they could have just let this one expire, let this one keep going. The thing was, it's just like I was saying in the Tesla trade, it had already gone down from $1.20 to 20 cents. So they only had 20 cents more to make, where they could theoretically lose infinity because they're short, right? Okay. So, at that point, when the risk reward, when you just have a little bit left to make versus a lot left to lose, not only that, and you also have the choice to roll down to another expiration in the same week and grab some more money real quick. It was a genius plan. And if the market finishes right about 127, 128, that would be ideal for them. They don't want the market to go right to the strike price and die. But whatever it does, if it blows through the strike price, they'll do fine. If it goes down, unfortunately, they'll probably cover this for nothing and then roll into another option in the next week, or roll down to another option the next week, and just keep on going. All right. Let's look at what else. Let's see what else we can get in the middle of. Let's do this. Let's look at the charts really quick. And let's do this. Let's see what's moving. Oh, wow. Look at this. The meme stocks are moving again. This is some little meme thing that Faraday Future Intelligent Electric. Okay, so I wonder if this means GME's moving, and not really. Okay. Coinbase looking good, gapping up today. We've already looked at Coinbase. Bitcoin looking good. I mean, looking better. It's not looking good. I mean, it's trying to start a trend here. We'll see. The past couple of times it's tried to start it, it's got shut down and rejected. We'll see if we get rejected again, or if we can finally start a trend that lasts for more than a couple of hours. All right, so Mister's up, of course. We looked at that. Oh, we didn't talk about USOY. Okay, I was so far behind, I didn't have time to catch up on the USOY. I'll catch up on their stuff, and that will be in the end of day update. And also, I'll do an end of day update. I will have the dividend estimates. So I'll come on probably as the market closes, or maybe a little bit before the market closes, because I think they're going to maybe announce the dividends right after the market closes. So look for me around 2 o'clock. All right. All right, guys, I appreciate it. Sorry, I've been MIA, but I'm back. Oh, I have a really big interview today with a fund manager, and I'm still also going through all my stuff from New York and trying to get content out from New York. I still have a lot of stuff coming out on that, but I have another fund manager, doesn't have anything to do with New York, that I'm going to speak with here in about an hour and a half. So I'm going to get in the shower, get shaped up, splash some water on my face, maybe take Jax for a walk real quick. And, but anyway, be looking for that. The other fund manager, I don't want to say who it is. I'm going to try to surprise everybody. It's a good one though. Be looking for that interview probably next Monday, and be looking for the J interview and some stuff from New York tomorrow and all weekend. All right, guys, I appreciate you, and I hope you have a great day. I'll be back about, let's say, 2:30 or something. How about that? All right. See you later.